On this episode of Through the Pines, we will cover 7 compelling reasons you should use a financial planner in 2026. So, reasons like financials are complex and evolving, and so is the tax landscape. What about behavioral coaching, personalized comprehensive planning, time savings and reduced stress? Even though AI is all the rage, is AI objective? Does AI have a fiduciary expertise? What about maximizing returns and efficiency and preparing for major life transitions? Welcome to a financial planning podcast with a down-to-earth vibe. Sasquatch listens while shoveling his driveway. This is Through the Pines. Our advisors for this episode, we welcome back Rex Baxter. There it is. Yes. Woo. And Brandon Smith, planwithbaxter.com. I got to fade out the audio.
Do you have one of those that goes boo?
Well, I do have a...
Just kidding.
One of these.
Just kidding, Brandon.
We don't like the full booze around here. So, yes, they are the 4-time Forbes Best in State Wealth Management Teams for Utah. Congratulations on getting 23, 24, 25, and 26, Rex, in the books. Also, the Advisor Hub's fastest growing advisors to watch under $1 billion and the receivers of the Ameriprise Client Experience Award. That is planwithbaxter.com. So if you have questions or you'd like to follow up with either Rex or Brandon after the podcast, you can follow up with them at Plan with Baxter. Baxter's BAXTER, planwithbaxter.com. Let's dive into some of these questions on why you should actually use a financial planner in the year 2026. I thought I could do it all with AI, Rex.
Well, as I frequently tell my kids, there you go again, working without tools.
Working with, AI is a tool.
Ooh. Yeah, it's
AI
a
is
great
a
tool.
tool.
Yeah, just not the right tools. So
it's the right tool. The right tool. All right, I see where you're going. Already he's getting a little sassy. Okay. Number 1, the complex and evolving tax and retirement landscape. Now you're not tax professionals, Rex.
We are not.
But how do you evolve with what the tax professional does to help you with your clients?
Well, even though we're not tax professionals, we still understand a lot about taxes, which allows us to have extremely good conversations with your accountant. Okay. And so, if we're having a conversation with you and we're looking at taxes, tax impacts, we're evaluating, where are you at? Are you possibly for whatever reason, you might be in a 0% capital gain tax rate this year because maybe you're retired and your income might be significantly lowered this year, then how much room do we have to get into that? Do we want to accelerate some gains this year? Do we want to do some Roth conversions this year? Is there an asset that's, a piece of real estate that you're looking to sell, and this might be a good year to do it because we're in a lower rate? And so we know the right questions to be asking, and we should know, as we're working with you, the dynamics of your financial plan, the dynamics of your wealth and what you're trying to do, so that we can kind of guide and steer you in addition with the accountant to make good, strong, solid decisions.
Okay, fair. Brandon?
Yeah, sometimes I see the complex questions that come out. I'm like, for the love, like, why are, you know what I mean? Like, it's like, all right, RMD age is 70 and 1/2 years old. Oh, wait, actually, now we're going to make it 72. And now 73, but with a caveat that it changes to 75. And then you got to take your first RMD, not necessarily the first year if you don't want, but the next year by April 1st, not April 15th, April 1st. And then, and there's just like all these wild rules. And that's just RMDs, right? Like there's a gazillion other rules. And I'm like, why? And then I'm like, but it gives me a job, like nobody else is memorizing all of it, you know what I mean? Like that's the job of a financial advisor. And so it's kind of fun, right? Because you meet with clients and you're like, hey, actually, if we do this, we could do this, and that could save you here and here and here. And why is it so complex? I don't know, but it is. And if we play the game, we can make a lot more money.
Yeah. And if you will, talk about just briefly about like backup. Was it backup?
Backdoor Roth?
Yeah, backdoor Roths, like catch-up contributions and things like that can help with taxes.
Yeah. So for example, right, if you make too much money, which phase out if you're married filing jointly, this year starts around 236,000, right? So if you make more than that, then you start to phase out and very quickly are unable to make a Roth IRA contribution. And so, well, that seems like the worst. But then we realize, but you can make a non-deductible IRA contribution. Anybody can make that in any income. And then you can do a conversion from an IRA over to a Roth IRA at any time in any tax bracket, right? And so as long as we don't have any other traditional IRA assets out there, because that would invoke those pro rata rules, then we can just do that backdoor Roth. Now, usually I say that to people and I get kind of like a blank stare, and that's what's so fun about financial planning, right? Is I can put all of your information in and then I know, right? I know that you don't have any other IRA assets, or maybe I know you do and we need to do something about that, right? And so that's, it's fun. I love when you're like sitting at a hot springs and someone's like, so what about this? And what about this? And you're just shooting stuff from the hip, but at the end of the day, it's amazing how often you go in circles just asking questions, and I'm giving the right answers and I'm trying to help them. But there's just so many things that if I can sit down with someone for an hour and put all of their information into my software, and I can say, all right, here's how much you owe on your mortgage. Here's what your mortgage rate is. Here's where your IRAs are. Here's where your 401ks are. Here's where your disposable income is. And I can put everything in. Then I can look at that and knowing what I know, actually make really good recommendations. And I'd say that's probably the best illustration of what it's like to work with AI as a financial advisor versus, if you're just asking questions, AI can shoot those answers back. But really what you need is comprehensively to throw everything into a software so we get a good comprehensive look and so that the answers are comprehensive as well.
Yeah. Okay.
I think one of the reasons that we've been as successful as we have been, Brandon, is that Brandon specifically, and he's better at this than I am, but I think
there are two Brandons here.
There's two Brandons. So the Brandon Smith is fantastic at making complex questions simple, and complex issues, complex strategies, complex all of that. He's fantastic at simplifying the complex. And I think that that's what clients need and really want is they have a question, and that question may spawn another 20 questions, or it may spawn a bunch of other ramifications that may kick into it that they haven't even thought to ask yet. And yet Brandon's brain's already going to the point to where he can simplify that really, really quickly when we have our clients' information in front of us.
Oh, that's awesome. Love that. Also, Rex, executive decision. We are moving the podcast from a camp trailer to Hot Springs.
Hey.
Oh, yeah.
Yeah, we could record from a hot tub. That'd be great. Just lean some microphones in.
Well, I don't know. Hot tub's a little sketch. I don't know.
Hot tub? What do you mean?
It's the winter time. I don't have my hot tub body yet.
I like being outside.
Winter time is the hot tub time.
Oh, oops.
Yeah, I agree with that. No, hot springs is because you're outdoors. It's just a little more. I don't know. Hot tub is more confined. You could do sauna sessions or something. Yeah. I don't know. That would be.
You could do that. Sweat it out.
They'd be shorter podcasts.
Sweat
for
to
sure.
the oldies.
Shorter? Oh, in the sauna.
Well, because I don't know if you want to sit in a sauna for 45 minutes. That's a long time.
You just sit in hot tub for hours.
Oh, geez. Really? I can only.
Well, and I always turn the temperature down a little bit so it feels more comfortable.
Next question, or next compelling reason to use a financial advisor. Rex, I'm sending this one to you because I think you like this topic of behavioral coaching, specifically during volatile markets. And so markets remain unpredictable, per usual. And so the emotional decisions and panic selling and chasing trends, all of that that's a good reason to use, I would assume, a financial advisor.
Yeah, I love behavioral finance and behavioral coaching and the psychology of what's causing people to make different decisions. As I've grown and matured as an advisor over the last almost 30 years.
And person,
I find that I really gravitate more and more to that. And I find that that's really helpful to our clients, for them to understand, kind of why am I asking the questions I'm asking? Why am I concerned? Why am I having the emotions I'm having? And kind of digging into that a little bit helps them that once they understand that, then they can kind of put their arms around what the issues are and remove the emotions from it and make it a good, logical financial decision after weighing the pros and cons. And so I really do like that. I really enjoy that part of the business.
Yeah, Brandon?
You see all the time these studies that come out where these large institutions that have like the two platforms, right? One platform where an like an individual can just open an investment account and manage it themselves. And then they've got their arm of financial advisors, and the firm actually has data on both, right? They can look through and look at the average rate of returns of all these accounts that have just individuals doing it versus advisors. And there's a massive discrepancy on these studies when they come out where the individual investors a lot of times are even lagging inflation. They're invested in the market, taking market risk and lagging inflation. And you look at that and you say, how could someone be so bad at investing? And I think there's a lot of things, right? It's chasing shiny objects. I mean, there's a lot of things that go on. But I think a big piece of that is the behavioral side. It's getting emotional about it. And I do feel like a big part of our job is helping people work through the emotional swings of volatile markets. Having like clients will call and say, hey, this is making me really nervous. What should we do? And to be able to work through that with them and say, well, we don't know where this goes from here. It might recover really quick. That's probably the most likely, outcome, but it might go deeper. And if the crash continues deeper, here's our plan B. Here's how we work through it. And when you have someone to talk through that and understand kind of where you're at, your odds of making the right decision go up.
Yeah. Love it. Very good. Okay. The next compelling reason to use a financial advisor in 2026 would be personalized, comprehensive planning, life events like starting a family, buying, selling a home, career changes, or maybe you get an inheritance or something. That's when an advisor can create a holistic plan covering all the things, right, Brandon?
Yeah. And it's as simple as we get people come to us and like, hey, I want to start a 529 for my kid. Great. Is that really what you want to do? Because what you really want to do is likely you want to provide some money for your kid. Now, do you want it confined to just education needs, or are there other needs, right? Do you want to help with a wedding? Or do you want to help with, are there other things that you want, or is it just, and it might just be education, right? But as an advisor, it's fun to talk to them. Well, have we considered a UTMA account, right? And the pros and cons of that versus a 529 versus just putting it in a non-qualified trust account for your family, right? Like what are the pros and cons of all these options? And that's where, I think that personalized, comes in, because a lot of times people just don't know the right questions to ask. And just sitting across from someone, I can say, all right, I'm hearing what you're saying, but I also wonder, is this what you'd rather, right? And just asking the questions and then, making the right decision from there.
Yeah, Rex?
Yeah, we don't have a preference in which way you go, right? To stay with the 529 versus a UTMA, situation or scenario. It doesn't matter to us which way we go. We just want to make sure that that tool is going to match what you want to do. And so if all of a sudden you say, yeah, I mainly want it for education, but you're right. If they get married, I might need some of this money for a wedding, or you know what, I might want them to be able to travel and take a trip. They might need to do that personally for a minute, and so look at these other situations. Then it might be, well, maybe 529 isn't best. I understand what the tax implications are. I understand the gross tax free, all these benefits, which are fantastic. But the benefit may not meet what you're actually trying to do. And I think that's one of the things of looking at kind of comprehensive financial planning and personalized financial planning is, instead of us trying to fit you into a box like some organizations do, they're like, oh, we've got these 5 fantastically managed portfolios. And if you're, 20 to 40, you should be in portfolio A. And if you're 40 to 60, you should be in B, and so forth. Life just isn't that cut and dry. Life just isn't that neat and tidy. And sometimes, I know, but sometimes life happens and you need something more personalized for you. And your risk level may not be the same risk level as the person sitting next to you.
Yeah.
And so I think having somebody that can dig into that and look at your personality, your behaviors, your, how are you going to act and react, and what are your personal goals? What are you trying to do that's different than maybe your neighbors? That's where you want to use a financial advisor.
Okay. Question for both of you real quick. Do either one of you have 2 clients not in the same household with the exact same financial plans across the board?
Like, no, of course not.
No.
Yeah.
None.
Yeah.
Yeah.
They're all personalized to
Right.
each individual.
Absolutely. They're all personalized. They all match theirs. And so you can, I don't have any two where their net worth is identical, right? Or any two where their cash flow is exactly the same.
Yeah.
And so, yeah.
Okay.
Yeah.
You were going to say?
I was just on that, right? It's not only is it 529s, but you get a business owner that comes in and is like, hey, I want a 401k. And that's great, right? But what they're really saying is, hey, I want to maybe offer a benefit to my employees, or I want an ability to save for my retirement, or I want my employees to save. And so that's where it's fun, right? Like, well, does a SEP IRA make more sense, or a simple IRA make more sense? Or are you eligible for a solo K or a 401k or your cash balance, right? There's so many different things. And it's just fun to be able to get the question, reframe that question, figure out what is it that you really are after, and try and fit that with the best available thing. And that's true of 529s. It's true of retirement plans. It's true of investment options. It's true of, even your retirement goals. And so I think that's why having someone to bounce ideas off of and really ask you, what is it that you're really after, that can be so valuable.
Okay. So this next question, as far as we're covering 7 compelling reasons to use a financial advisor. And this next one, Brandon, how much would you say how much can you save someone time and stress by helping them with their finances?
Stress? Incredible amount, like endless amounts of stress, right? And that's one of the greatest parts of my job is how people are like, I've never, like just the other day, so I've never felt this good about my money ever in my whole life, right? And that is such a fun gift to be able to give, right? Is that stress relief. Time is time's a funny one, right? Because I talk to people about this all the time. They're like, maybe I could manage this on my own. And the answer is, yeah, you probably could, right? Especially if you're very astute, but do you have the time to properly manage it on your own? And even if the answer is yes, would you be willing to put in the time to look into all the different options?
And is that the best use of your time?
Sure. Right. Yeah. Right. And even if you did have the time, you had the capability, and you wanted to do it, would you still keep up with our portfolios within 1%? Right? Because that's ultimately the question we're trying to solve for. Like, are you going to be able to keep up with ours, with all the resources we have and the research that we have and the teams that we have and running our portfolios? And are you really going to stay as disciplined about managing this? And usually the answer is an easy no. Right? Like when people are being honest with themselves, they're like, yeah, I'm not going to do that.
Even with your fees.
Yeah, right. And that's it. Right. Like, and that's why the model works so well is because when you look at the potential downside of not having it managed properly, right, you can easily start lagging by 3-4%. And now all of a sudden it's like, well, why did I want to give up? Why was I trying to save 1% if I didn't, at least keep up within that 1%?
Mm-hmm. Rex?
There's been a number of times throughout my career where somebody has come to us and they're making the statement of, hey, I've always done this on my own. I want to try out using an advisor, but I still kind of want to do some on my own.
That's I want to try it out, like riding a bike.
Try it out.
Yeah.
Yeah, it's like demo day.
Demo day. Yeah, Ameriprise demo day. Yeah, something like that. Oh, that's funny.
So they'll do that, but they'll keep a certain amount of their investments on the side that they manage on their own. And as they're managing this on their own, each
do they tell
year.
You this?
Yeah,
for sure. All the time,
right?
Yeah,
because we'll go through it, and so it'll kind of be a running thing. Oh, I outperformed you this year. Oh, you outperformed me this year, or whatever the case may be.
Okay.
Right, and typically they're taking significantly more risk in that than what we're taking in their main portfolio, and they understand that. And so we go through that discussion of, yes, you outperformed us, but risk adjusted, we outperformed you, and so all these kinds of things, right?
Yeah.
And we could do that too if you wanted. Like, no.
No, I want you to keep doing what you're doing. Yeah. And yet as that progresses over time, more times than not, the conversation starts to turn to, I didn't really pay as much attention to it this month. I really haven't looked at it for the last 3 or 4 months. I really need to look at this more. And that typically evolves to, once a year looking at it, or twice a year them looking at their own portfolio is all. And at some point it's like, you know what, I'm really not managing it. I'm really not taking the time, right? And so when it gets to that point, they really need to turn that back over and let somebody else manage it and oversee it. And they typically come to that realization. Some people it takes a year, some people it takes 10, you know, and you know, people go through life cycles to where they may be at work and have kind of a process to where they're looking at it each week or each day, and then all of a sudden they retire and they don't have that same consistency, that same process in place, or, you know, they may go through some sort of life change that changes what that process is like for them. But I think you need to be aware of that and be aware that if you're not going to put the time in, if you're not going to put the effort in to do it on your own, then a financial advisor is a great alternative.
Yeah. Yeah. Okay, Brandon, I feel like it's time for some more numbers.
You're right.
You're right.
So population growth is a really important topic, I think, for all of us to be aware of. Worldwide. Yep. And so it's interesting. Population growth can be as simple as the birth rate less the death rate, right? And so are increasing or decreasing just based on births and deaths? And
I did my part.
Yeah, right.
You did your part for everyone in the trailer.
Rex has 7 kids. And then immigration, right? Flows of people. And that's one of the things that the United States has as a strength is that, you know, even if we have a lowering, you know, birth rate, we can make up for that pretty easily because of how many people around the world want to come into our country. And so anyway, this is just a projection, right? I think it was sourced from the United Nations. First Trust kind of put it together for us here. But essentially it shows the highest growth over the next 50 years. So this is going to 2075.
Jeez.
Number one,
so far away.
Number one is Canada, actually.
Okay.
And
population growth?
Yeah, primarily based on immigration. Now, part of this is as a percentage, and Canada is not a very big country population-wise.
Yeah.
I mean, they're less than
Land-wise,
California.
big.
Yeah, right. So they got plenty of land, not a lot of population. If you like snow and ice.
Yeah.
My family's from Canada, my dad. Anyway, number 2 is actually the United States. Is what they've got projected. Both the United States and Canada, fairly straight, consistent line. What's interesting is India starts out of the gate really strong and then kind of curves off according to their projections. And I think a lot of that has to do with, you know, developing nations tend to have a lot more kids. And then as they start to get more money and as they start to say, maybe I want a vacation rather than a kid, right? Like you see that population rate drop off. And so they're projecting that they come in number 3, even though they got a really strong start out of the gate. In the bottom, we've got third from the bottom, Japan, second from the bottom, Italy, and the very bottom, China.
I'm going to say Japan's going to pick up because of all of the people from the U.S. who love vacationing and like second homing there.
Yeah, but they're so limited. They've got limited space. Yep. That's hard.
Oh, well, there's that.
I think you also have, you know, birthing constraints that the government's putting, like in China, right? To where you can only have so many kids. And
used to have that.
And India's, you know, talked about that back and forth. And so it'd be interesting if more countries put that into place, or if they remove that, because that's one way the government tries to control, you know, whether they're a growing population or not. And that comes down to resources and what they can provide.
The opposite is like kind of what the U.S. is doing, is giving incentives to have kids, through financial incentives and tax benefits.
One thing that's just not talked about enough, but military might and the ability to hold your own in the world on the global stage is absolutely a function of economic might, right? And what is the economy in its simplest form? It is number of workers working multiplied by their productivity. That is your equation, the simplest equation for GDP or your economic strength, right? And so it's interesting, right? I talk to people and they're like, China's going to take over the world. And it's like, not without a population, they're not.
Right.
Right. And I think they kind of realize that at this point, but
which also I've heard recently could have been massively overstated.
Yeah,
As of
yeah.
But that's another story.
I feel like that's
Good
all reports out of China on the economy anyway. Like, well, this comes from China.
There's always a caveat.
For what it's
Big
worth.
asterisk up there.
Yeah, we just don't quite. We don't know.
Right.
All right. Those are fun questions. Okay, 7 reasons, compelling reasons, by the way, to use a financial advisor in 2026. The 5th one, Rex. Apparently, you're objective.
We do try to be objective. Yes.
You have a fiduciary expertise, I'm told.
Yeah, so we are fiduciaries and we need to, maintain that, meaning that we put your interest first ahead of ours or our firm's or anybody else's. And I think it's important that when you are working with advisors that you work with fiduciary advisors.
So there's some that are not.
Yes.
Okay.
And that's what's so wild about the world. Nobody realizes that.
Yeah.
But there are a lot of financial advisors that are not fiduciaries.
Yeah.
And that's a dangerous, right? Like Rex and I are very upfront about our costs. This is how much it costs to manage assets. This is how much it costs for financial planning. I mean, we are the first meeting, right? We really like people to know. And every once in a while, not often, but every once in a while, people are like, I've had a financial advisor that was free. It's like, whoa, like nothing is more expensive than a free boat. Take it from me. Other than maybe a free financial advisor, right? And so it's, they're getting paid somehow, right? And if they're getting paid via commission backdoor from the company, that's a really dangerous spot because they're not acting on your behalf. They are working for the company. Mm-hmm. And that's an important deciphering to have.
Okay.
I think there's a lot of hybrid financial advisors too, right?
Yeah.
That when they're going and using certain products, then they're fiduciary on those products. And when they're doing a commission-based or a certain insurance product or different things like that, then they're not a fiduciary. And that's a very blurry line that goes back and forth. And my opinion is that rarely is that transparent to the client when they are going back and forth and moving back and forth. And so, sometimes I think you may have some advisors that say, yeah, I'm a fiduciary, and then really quietly in a whisper, when I'm selling A, B, and C.
Interesting.
Or something like that. And so I think you have to.
That's called lie by omission.
Yeah,
it is.
Yeah,
and that's an issue, and it certainly is an issue with regulators. That if they hear that and find situations like that, then that certainly is an issue that would be sought out.
Yeah.
And so I think for advisors, they need to be transparent. They need to be honest about when am I a fiduciary, when am I not a fiduciary, our fees, when does this work. But I think you do want somebody that's unbiased. It doesn't mean that they have to be brutal. It means that they can be unbiased, show you the pros and cons, help you through those decisions. At the end of the day, we always remember this is your money, not our money.
Yeah.
And so you want to make sure that you understand the pros and cons, and then you can make a good decision for yourself. Yeah. We'll have an opinion as to what we think is best for you. Doesn't mean you have to do our opinion.
Yeah. Brandon, we kind of covered this next reason you should use a financial advisor in 2026, but you can go a little deeper on it, and that is maximizing returns and efficiency. And so studies show professional advice often outweighs fees through tax-efficient investing, smart asset allocation, and disciplined saving. For those with growing assets or mid-career stage, advisors can help maximize employer benefits, build emergency funds, and position portfolios for long-term growth without emotional overreaction. So if you just want to double down on how well you guys can help maximize returns, Brandon.
Yeah, I think people like to reduce us sometimes to just managing money, right? What's the rate of return you're getting? And the nice part is I think we can compete very strongly in just that, right? You give me X amount of dollars, and literally, if all I were to do was say, thanks for this money, what's the risk you want? How much are you willing to take? And I invest it. And I think that works. I think we're competitive. If that's all our business model was, I think we'd be competitive there. However, there's so much more, right? Like so much more. And it's those follow-up questions that we've talked about in this podcast, right? Like, is it really a 529 or is it a UTMA? Is it really a 401k or is it an IRA? Are you really that risk adverse or could we work with, right? Like, and that's where most of the value is gained, right? And that's, I think, the primary reason people love working with a financial advisor is because they're able to ask them questions they wouldn't have asked in the first place, and therefore allow them to achieve goals that A, maybe they didn't even think were possible, and that happens all the time, or B, just be able to feel confident about the decisions they're making.
Yeah, Rex?
Yeah, I think it's really important that you are using a financial advisor on the entire gamut, that you're using them both on the investment side as well as the planning side. I think the industry has changed a lot over the years to where it was only investment management, right? I make jokes on previous podcasts about, you get a hunch and you buy a bunch, or you smile and dial, or, all these guys. Brandon took a drink. He's about to spit it out.
Oh, I like the Rexisms. They're probably industry-isms, but they come out as Rexisms.
Well, they were back in the day. I mean, that's how this, you watch movies about the old, and man, talking to these old advisors that have been around for like 40 years, right? Like that's what they did.
Yeah.
They like sat around at a call center, just like cold calling people, be like, hey, I want to sell you this stock. And like some of them were like, yeah, we didn't even have social security numbers. We're opening up portfolios. We're just writing names down and we're writing what we're buying. I mean, it was like the Wild West.
Yeah.
And financial advising has come so far from then, right? Where I go and meet with clients and say, all right, what are your goals? What are your dreams? What are we trying to accomplish? Here's how we can work that in with the tax code and with investments and bringing all of it together. It's a completely different world today than it was 40 years ago.
Yeah, with that, the fees have changed over the years too.
Right. Yeah.
They've gone from purely commission-based to more of just a fee-based on asset management, or what industry-wise we call a wrap fee. You charge 1% on the assets or 2% on the assets, whatever the fee is. And now we're going to charge X amount on the asset management, and we're going to charge X amount for the financial planning, for the thought processes that we go through, for the behavioral coaching, for working through the goal setting, working through all those different pieces. And I actually feel like that's dollar for dollar. I actually feel like that's a better dollar spent.
Agree. Yeah.
Than on the portfolio management.
Yeah.
I feel like the planning is much more important to people in their financial longevity than just the asset management. We can, although I agree with Brandon, we can compete very well on the asset management, and I feel like we do a fantastic job there. I also feel like that can be outsourced if we needed to at some point. And so,
but the way that most, especially fiduciary level advisors are working today is, in my opinion, so much better than the old model, right? Because the old model had flaws everywhere.
Conflicts
your advisor,
of interest,
right?
all
Conflicts,
over the place.
Yeah. I mean, you get a call from your advisor. He's like, "Hey, I really think we need to sell this and buy this." Like, do you really think that? Or is it just because you're getting paid a commission on both of those transactions? Mm-hmm. And that was literally, that was a big thing, right? They called it churning, right? Like advisors would just call and, hey, I got a new one, here's it. And people loved it, right? Because they're like, oh, a new stock. But really there was a conflict, right? It was the advisor just needed to sell and buy more stock so he could generate more income. Now, where you charge based off of a percentage of the portfolio, our interests are now aligned, right? I'm not getting paid because I'm like adding or taking away stock. The more I can make your portfolio earn, the more money I make and the more money you have, right? And so we're sitting on the same side of the table. Mm-hmm. When I meet with a client and say, hey, we swapped this ETF for this one, this mutual fund for this one, we made these adjustments, they know that my objective is to grow their money within that risk tolerance as effectively as possible. And that doesn't mean I'm going to be perfect, but it does mean that our interests are aligned and we're on the same team.
Yeah. Love that.
Yeah, there's a lot of that. I mean, whether it was churning, whether window dressing, right, where somebody would sell you a stock and then they'd go buy a bunch more. So at the end of the day, the stock price would be up, right? So at the end of the day, they could say, hey, look, that was a great decision.
Genius.
You should buy some more, right? But now I feel like as each change happens, then all of a sudden new conflicts or new concerns can arise, right? So now, through a lot of the churning has, and I wouldn't say it's gone to zero. There's certainly people out there that could still churn and could still do that you have to be aware of. But now you get into a reverse churning to where people will charge you an asset management fee and do nothing.
They're not actually managing.
They're not actually managing it. It just sits there, and you're just getting charged for it year after year after year, and that's a big issue with regulators right now. And so I think it's important that as you're using advisors, that you do understand kind of what role are they doing, how do they manage money, how do they do the planning, are they fiduciaries, are they not fiduciaries, all of those kinds of issues.
Okay. Last reason of the 7 we came up with today that you should use a financial planner in 2026. Brandon, preparing for major life transitions. So whether we're approaching retirement, dealing with elder care, blending finances in a new relationship, perhaps, maybe legacy planning. How do you help people with major life transitions?
Lots of questions.
Yeah.
Because ultimately it's understanding because every life transition is different, right? And relationships are different, and new marriages are different. And I mean, there's just so many things. And like Rex has said, right? We're not trying to like push you one way or the other. We're just trying to understand what is your objective? Where are you trying to get to? Is there something else that I think you might want to consider? And then trying to help you find the efficient way to get there.
Okay, Rex?
Yeah, there's a lot of life transitions where having an advisor is extremely helpful. I think of one client a few years back that came to us. She'd been divorced, or not divorced. She'd been widowed at kind of midlife, and she was in a new relationship. She was 59 and like, I don't know, 8 months or something like that old. And she was like, I really think we're going to get married. And it was like, well, that's great. You should get married if you want to get married. But
4 months.
Understand, if you delay this 4 months, then Social Security will do X as opposed to Y.
That's crazy.
And so I'm not trying to stall your marriage, right? Or your wedding. If you want to get married, go absolutely. We'll be there. We'll throw some petals for you and everything else. But just understand. And a lot of times, unless you have that kind of relationship with your financial advisor to where you're having that level of conversations and keeping them at that level involved in your life, you're not going to know. You're not going to know what those issues are. So yeah, I think life transitions are critical to be utilizing a financial advisor.
Yeah. Okay. Very good. And you can utilize a financial advisor by seeking out planwithbaxter.com. Planwithbaxter.com is BAXTER for Baxter. So thanks you guys for this episode, hanging out with us. Appreciate it.
Thank you.
Thanks.
This podcast was produced by the Banyan Collective and recorded in our camp trailer right here inside the Monarch Building and inside the Nine Wells Arts District on historic 25th Street. If you found value in this podcast, you consider supporting us at buymeacoffee.com/Banyan Media. And you can subscribe to us on YouTube at Through the Pines. You can follow us on Facebook, Pines Podcast, and on Instagram, Pines_podcast. This has been Through the Pines, reminding you to use yesterday's dollars to finance tomorrow's dreams.